I mean, of course, we have to have appreciation for lower time frames. So looking at the chart, I'm just going to, first of all, just remind ourselves of certain key levels specifically. So I'm going to first of all start with the yearly levels. This is actually becoming more and more relevant now. And we actually learned the lesson today as well. So specifically, just looking at the yearly chart, so I'm going to go to 12-month chart. Nobody really looks at this because people think it's irrelevant. So just to highlight again, just to be aware of certain yearly levels. So of course, we had 13.9K. 13.9K is here. And of course, that was, of course, 2019 peak. Okay? Then, of course, the 16.57K. So that was around the low of January 2022. Of course, 16.570 was, of course, the open of this year. It's so corny and cheesy, right? But like you really don't want to fight the trend, specifically if you're swing trading. But 27.7K roughly is the 2021 low. And then next thing is the 2021 open, of course, was 28.9K. So that's something to really consider and just really think about, right? And just, I mean, of course, you have other levels. For example, 46K was around 2022 open. Specifically, whenever you're at support, right, like this, you should always be careful of these things because you always have to start your analysis from top down, okay? So, for example, if I'm at a weekly or a daily or a yearly support, I'm going to be more hesitant to short it, and I really don't want to. And so it's kind of it's a difficult situation because obviously we're in between this 2021 low and this 2021 open, right? And something else obvious, of course, is we're having this somewhat of a compression as well. Price getting more constricted. And one of the laws in market dynamics, obviously, is that the greater the period of contraction, the greater the period of expansion, right? And so there's something to consider. So you to always be careful. Like, of course, you don't know when it's going to actually break out. You can only speculate. So we don't know if it's going to continue on and on and on and on and on, and eventually just have a huge surge to the upside or the downside. And you can never really be 100% sure, right? So now I'm just going to move to the monthly level as well. So looking at this. So, of course, this hasn't really changed since last time. Really speaking, is obviously, we've been in the same month. So, of course, the monthly open, of course, was 23.1K. Of course, this was really key because that was the close of January 2023. We had a doji here, and, of course, the open of this level. The monthly level, of course, 25.3K as well, something I'm looking at as well, to see the reaction as well. And now a bit more relevant now is the weekly levels. And so we've got a new weekly level now. I've put down, of course, this weekly level over here, so 24.2K, because, of course, that was the weekly close here. Of course, you have these wicks here, but this was a weekly close around February. I do have 26.5K as well, because, of course, we had a huge dump here, leaving many single prints and imbalances, but it was the weekly open here and the weekly close here. So, and it wasn't as surprising at all that we did have a reaction of that, specifically because, of course, we have the Gaussian channel, right? So, looking at the 5 days, so this is the thing. A lot of you, of course, took the short trade with me. Some people caught it from the top. I didn't really want to catch from the top because around here, because you don't know, because we had this peak here. So I would prefer going back in the channel. I took the nice short trade. My first take profit got hit, and so it was a risk-free trade. So I just went on with it, really. But then naturally, of course, we were in that situation. Obviously, the 5 day hadn't closed. So now this is the new 5 day. Of course, Bitcoin is a very new asset. It's like an emotional 13-year-old kid because it's only been around for 13 years, right? So we can only speculate what's going to happen next. The thing to really consider is that let's look historically what has happened in the past. That's all we can do in the moment within our given data set. And so historically what happens is sometimes in the Gaussian channel, what happens is we have a dump sometimes, and when you're transitioning from specifically from a bull to a bear market, right? We have a dump. We sometimes go in and we go out a free pass to the next side. But on other occasions, sometimes what happens is we have an initial rejection of the medium band. Okay, so this is what happened here initially. Sometimes what happens is we go to the bottom end here, then we go up to the medium band and we have a rejection. And then sometimes historically it comes back up and it gets a free pass. Okay, and so in this situation now, we had the initial rejection here, and we fell back down and we pushed back up. So, I mean, given the limited data set, I mean, of course, this is the 5 day, and of course, we cannot speculate that much. But really speaking, like, I'm very hesitant to short this. I'm more interested in buying pullbacks. Yeah, but in terms of weekly levels, I mentioned 26.5K around here. But then, of course, I want to bring your attention to this next weekly level over here. So that is around 29K. So going back in May, June, this was basically a bear's paradise. Like literally, we're just shorting everything, right? And then when we dumped here, we had a bit of support here on the weekly. This was the only weekly support here. Okay, so I would expect some kind of reaction, and so of course this was the weekly. So we had a dump here and a retest. So this was actually the weekly close here, so 29.8k. So this obviously is a key level, and so I've put. I mean, it's not the best weekly level in the world, but like given the limited data set, this is what I'm going to mark here. In terms of daily levels, okay. So I mean, of course you've got 20.2k. I've got 24.36. I'm going to bring that a bit down actually. So now I've got 26.9k as well around here, because we initially went past through here and we had a bit of around support here, and now it's the daily open. So these are all the key levels. This is the latest level of added, so that's just something to be considerate of. Okay, and of course this is something else. I'm not a huge fan of trend lines, so my trading style is not very discretionary. I mean, of course I use things like this, but I rely a lot more on quantitative data and statistics mostly, just for illustrative purposes. So of course I've drawn this imaginary trend line here, hitting from here and here. So this one, and of course I've also drawn this one as well, from here and here as well. So dotted trend lines. So these are potential bounce regions, and I've also drawn one here as well. This is a pink one over here, and of course this is after the Silvergate FUD. It had a dump and we wished back up. So potential retest like that. I'm not ruling that as well. So it's just something that I'm potentially considering as well. This is the macro fib. So I've drawn this from the cycle peak to this cycle low, and of course naturally we expected some kind of reaction around 28.2k. It is fairly obvious, right? Because it was the 236 fib, and of course the 0.65. I see that a lot of you like the 66 fib. So I mean, I'm sure it's not going to change much, but the 65 fib is 50k, 618 fib is 48k. And so the speculation goes, of course, that in 2019 we, of course, naturally ran up to the 618 fib roughly. So that was around 14k. So naturally people are thinking, okay, it is possible. I'm not ruling it out, to be honest. I'm definitely not ruling it out, but I'm not getting ahead of myself. I am in a couple of longs, and for me, volume is greatly king. And so just going back here now, if I mentioned earlier that anyone that was here around this period, especially if you're a bear, it was basically a bear's paradise. There's very little structure, okay? So let's look back what happened here. So if you started trading like less than a year, I think it becomes a bit less relatable to you what's actually going to happen next. And so let's go back here what happened. So we had this dump in May, okay? It was very much the same fractal playing out over and over again. You have a dump, bear flag, dump, okay? Similar here. We had a dump, bear flag, dump. When we actually dumped here, right here, this green candle was the only weekly we actually had some kind of reaction, okay? Then we just dumped further. It was just mass panic as well. So this was the weekly open, this weekly close. So 29.4 to 20, 30k roughly expect reaction. I'm in no shorts at all, because I know based on my experience in Bitcoin that there's very little in the way between 28 to 30k, really speaking. Okay, and the thing is, now let's go back to this section here. Okay, so I'm going to draw an actual volume profile here. Okay, so we had a dump here, we had a reaction here. So now let's take the tool out. Okay, so I'm going to draw it from here to roughly here. Okay, so price generally gravitates towards areas of volume. Okay, because it greatly dictates the habit of retail and just for any kind of transaction to happen, right? So you've got the middle volume area here, okay? And this top bit is the value area high. So it's the upper extremity, if you like, of the high volume area. And you've got the value area low here. This is the lower extremity. And looking at this section, this snapshot, this was the value area low, so around 28.9k. The point of control was 30k, and the value area high was 30.8k, okay? This is something to consider. And so a potential reaction. So I mean, I mentioned that 28.9k keeps 8.8k keeps coming up, but a potential situation, of course, is a reaction across this 28.9k. So this is a key level resistance that I might see, and of course, if we get acceptance, we'd of course go to this point of control here around 30k, and so this is why I'm hesitant. So this potentially could be a rejection, okay? But the problem is that if we get acceptance into here, then there's actually very little till 30.38k, and so I'm actually interested in no shorts really at all. I'm just not interested in any shorts. I'm just riding my long. A potential situation, of course, is that this 32k level is quite interesting. So of course, potential situation, of course, could be some kind of reaction like this. So we could go up like that, and then we could just have a dump afterwards. So that's something to consider as well. So so in terms of situations number one, we push up, we reject of this value area lows of 28.9k. If we kind of push up and then retest it, okay, then we're most likely going to go to this 30.8k region. But then the biggest test I think will be this 32k region. It is obviously a key daily level. This is the best. I mean, if you draw this, so it is just to illustrate the point, it is a lower high, of course, right? Of course, if we regain structure there, I think this will be the situation in which a lot of bulls, a lot of people who are just moon boys, this will be the situation that will create mass FOMO. They'll be really forced to really buy in, and that could be the point where we get that desperation, where we get that dump back to new lows. So that's the situation. I'm in the camp where I do believe we do tag 9 to 12k eventually. I'm not saying it has to happen now, but until then, it's actually relevant because you can just make sweet gains by just trading the trend, right? So it's something to be aware of. So I think that the short of the century will be not here. I'm interested in no shorts, but once if we have a false break of this, then that's a potential short. But another potential short, of course, would be if you have a rejection of this value or low, so around 28.9k. So there's a bit of confluence here as well. So I mean, numbers are really marked on your chart. I think 28.9, 29.8, and of course 30.8 as well, and 32. I mean, so these are all levels that I am looking at, and I'll be interested to really see if we get some kind of an actual reaction against. I mean, if you go in the monthly chart, let's have a look. I mean, in the monthly chart, it could just be a lower high, right? So in the monthly chart, highlighting this, it could just be a lower high. You just don't know. So just see how it plays. But in terms of weekly is bullish until proven otherwise. Like, we cannot deny that. Like I'm not going to force it, right? So it's like, for example, if you're in a lower time frame, if the 1 hour is bearish, and if the 50-minute is bearish, but if the weekly and the daily are bullish, then I kind of give higher priority to the higher time frames, right? But on the weekly, we have taken out structure here, and even this is taken out structure, so that's something to consider as well. On the daily, we still are bullish. Just drawing a Fibonacci. This is what I've noticed particularly, right? I keep saying that there's two kinds of greed in this market. The first kind of greed is when somebody enters a position and just doesn't want to take profits whatsoever. The second type of greed, when the price goes up, but then people are just not really willing to long pullbacks because they're very adamant that it goes to particular fibs. And sometimes when you're in an uptrend, specifically in Bitcoin, there's never any guarantee that it's going to go to the 618 or 0.5, 786. This is what I realized. In an actual uptrend or a weekly uptrend, very often it only retraces to the 236 or the 382. And so this is what I realized, that specifically you have to sometimes adapt your analysis, I find. The situation is that, imagine people shorting here. Then the market goes up. Do you really think market makers want to let these people shorted early off the hook? Absolutely not. Markets are designed to cause the maximum amount of pain to the most amount of people. Yes, of course, textbook, you want a retracement here. Of course, that's obvious, right? Everybody's thinking the same thing, right? Most people are thinking like, oh, well, I'm going to draw an order block here and I'm going to buy, but this is real life, okay? This is real life. You don't always get the perfect retest. Like, you don't. Of course, on Friday, we had this huge run-up, push down. I don't really like trading on Saturday and the weekends in general. Saturdays specifically, I've actually noticed the 1 hour confluence trend across backtesting. I find it's actually less reliable on Saturdays. And also, if you actually wait 30 minutes after the US Open for like day trading and scalping, I've actually noticed your win rate improves significantly as well. It's just my own personal experience. So I didn't bother trading on Saturday, but then I noticed we pushed back down. And then on Sunday, I thought, okay, well, this could be some kind of SR flip. This was actually the 1 hour, right? Peak, push down, push up. So I thought it was some kind of retest. I mean, obviously you had this kind of liquidity grab, stop hunt. I longed here actually, so around 27,080. It wasn't the best entry in the world, right? But this is just kind of like, at least I'm not longing here, right? But longing here and longing here is not the same thing. Yes, I've bought the same price here, but the thing is, it's different. It's a retest, right? So we had a push up, push down. And then on Sunday, I was in a difficult situation. I saw, obviously, price has gone up so much, right? But then of course, I looked at things like this as well. And I noticed specifically on Sunday, of course, Sunday would have been 18th, isn't it? 18th. So Yeah, I mean, this is crazy. 0.44 net long. So in other words, only 44% of retail are long. So they're heavily net short. Open interest was slowly creeping up as well. I mean, these are the top traders. The top traders were just pretty much slowly stacking up. So the top traders were actually stealthily opening positions. I mean, they weren't crazy net long, but there was definitely divergence between the top traders and the retail. I've hit my first take profit, so around 28.30. You might be wondering, like, it's a bit crazy, right? Like, is it really going to hit 30K? I can't say for sure it's going to happen within the next couple of days, but I'm not ruling it out in the next 7 days. I don't think it's out of the realm of possibility, because I'm not trying to be a moon boy, but the thing is, I've hit my take profit once, so it is a risk-free trade at this point, so I'm just kind of letting it run, because structurally, there's actually very little here. It does seem kind of like every time there's a dip, that the buyers are just stepping in to buy it in, right? And the shorts are getting liquidated. But the thing is, it could be a situation now where, of course, this could be some kind of lower, higher end breakdown, right? I mean, of course it could. But my stop loss is quite wide. It's a swing trade. And so we'll just wait and see. And so I'm really curious about this. I mean, obviously, we came across this. So it's basically an auto. I mean, it's tagged courtesy to Stockbroker, of course. Of course, you can't trade based on this, right? Like, of course, it updates, right? And, of course, it changes. This seems to imply that this was the wave 5. I mean, of course, a pullback is definitely possible, but it's just interesting where this is showing it. Okay, this is kind of implying, and of course, this is on the 4R. I wonder what the daily shows. Okay, interesting, very interesting. But, we've had wave 1, wave 2, wave 3, wave 4, wave 5. And this does seem to imply there's going to be some kind of retracement along here. But, yeah, I mean, I don't know how really seriously you can take that, right? I mean, you can't. I mean, it's just for fun, right? But yeah, looking at certain other things, I'm just going to put specifically the VPVR as well. So looking at this, this is taking the snapshot of volume, like this overall area. Okay, so looking at this, so I mean, again, there's very little in terms of volume until 30K. Yeah, I mean, it's not at all surprising as well. When we were saying, right, like what was interesting is specifically around 25K. So many like a lack of lack of volume nodes here. And so we all kind of thought that, okay, once we clearly break 25, because very little on the way till 27, 28, it kind of happened, right? It came to fruition. Of course, the question is this some kind of lower 1-hour high? Perhaps, that's something to consider. I'm not actually trading altcoins at all. I'm just trading mostly Bitcoin. Because, of course, let's look at the dominance, okay? I think you really have to time when you're trading things, right? Because, of course, the Ethereum Bitcoin valuation has just pretty much been bleeding. And sometimes what happens is that when Bitcoin pumps, sometimes alts there's an initial period where alts just bleed. I'd rather just trade Bitcoin, but once Bitcoin has gone sideways, sometimes it's just kind of a bit more stagnant. Then I'm more actually likely to actually trade the alts. But so far I'm not touching them yet, but this is still down trading, so you're actually losing Satoshi by trading ETH, right? The ETH performance has not been that great, right? Like, of course you might think, well, I'm going to trade altcoins because it's more lucrative, right? But really speaking, ETH has actually done not that much compared to Bitcoin, really speaking, right? This was Ethereum, so 2K was around Ethereum's August high, but we haven't even got anywhere near that, despite Bitcoin going 30K. 28K, right? But we're not even there yet, so you have to really pay attention to the ETH Bitcoin dominance, right? Looking at the ETH yearly chart. Certain key levels. So, of course, on ETH, so the 2021 low, of course, was $715. The 2021 open was $736. And, of course, the 2022 low was $878. And naturally, the 2023 low was 1.2K roughly. And the 2023 open was 1,196. So, obviously, higher time frames have more value, right? What else is there? Yeah, so I mean, of course, 3.6K is 2022 open, and 33.8K is 2022 high, sorry. And so these are all the yearly levels that I'm actually looking at. But now looking at more monthly levels, okay? The monthly open is around 1605K. And a key monthly level, of course, I'm looking at is 19.3K. So potentially when Bitcoin goes sideways, you might consider potentially ETH. Yeah, so now looking at the weekly chart in terms of ETH, of course, we've had rejection here, push up, and of course, reaction around 1071 is a key level. Of course, weekly level is 1680, because of course, this was the weekly close around here, and we'd push up, past this. So this was a key weekly level. October is, well, we had reactions across here, so this is what I'm looking at. Sam is saying, I like ETH too. Thanks. I mean, I'm not saying Bitcoin doesn't have utility, but it's just, yeah. I just think ETH has a bigger multiple chance as well because because it's kind of hard to get 20x on Bitcoin. I mean, maybe by 2030, right? But it's just yeah, my money's more on ETH to be honest. But I mean, overall in terms of the ETH chart, I mean, there's very little. I think 19, 20k to be honest. But okay, so I mean, the top traders are slowly accumulating, of course. Sorry, the retail traders, I mean, they're still heavily net short, really. But it seems that some of them might have given up in the last 15 minutes. So there's been a decrease in open interest. Decrease in open interest. So some of them perhaps might have potentially closed some shorts. Potentially they might have. Yeah, I mean, it makes sense, right? Because in this recent run up, they might have got liquidated. So naturally, the open interest declined. I mean, there is definitely fuel to go up much higher. You have to admit, right? Like this doesn't. I mean, of course we can have a pullback, but to me, this doesn't really look like the kind of typical picture of a dump. When there's a dump, I really want to see a lot of trap longs near, for example, near a local resistance. Okay, I want to see trap longs. I want to see open interest really increasing up. But the thing is, it's not the typical picture of a dump just yet, and so. I'm not in any shorts, to be honest. We just have to wait and see. Of course, other markets as well. Looking at the S&P 500 index as well, just for full picture. Of course, we've been in this kind of downward trend line here. And I spoke about this, certain weekly levels we have around 3,500 and of course 4,300. But this of course is a level that everyone's looking at. Potentially here, around December lows, around 33.7k. And the thing is that last week, of course, a lot of people panicking. We were coming around this sloping trend line, and we had a bit of a reaction of it. Of course, we had a bit of a wick, but we still stayed above it, and so it's just waiting and seeing. Really, I mean, of course, I'm not ruling out some kind of situation I mentioned last week as well. Some kind of dump like this, a false break, and then just kind of go back to these highs. Really, that's the situation I'm really looking at. I mean, I appreciate that in real time it's very easy to be very bearish, but I mean, of course, it's just a trend line, but it's beautiful to see how it's still held, right? I mean, even though it's just a bloody trend line, right? But it's just interesting we have this reaction. It's just curious to see really where it goes. So looking at the total crypto market cap, I've extended my fib. So I mean, it seems now we're actually getting closer and closer to the actual August peak as such. This was the August, so it was around 1.18 trillion. And so we initially had this reaction across as 886, but now it seems we are heading here. And so this could be a situation where you might think, well, you might want to close some of your actual spot positions. But, potentially there's no harm taking some of your spot positions. Very often when your counters are green, very often that's it might be an indication to potentially trim some, right? And so it's quite interesting to see if we get there. And of course we have this rejection here. And so this 1.18 trillion is a region that I'm looking at as well in terms of the total crypto market cap. And so, I mean, of course, I spoke how we've pretty much in this channel and nothing crazy new. I mean, last week we expected we of course went to this local daily resistance here and then we pushed up and then we had a bit of a false break kind of in terms of, a daily, a bit of wick, and so we've pushed back down. And I'm curious then if we actually get some kind of reaction around the 618 or 616, and of course 104 is a key daily level, and so it seems like it is heading towards this reaction. And of course, I mean, I always say that Dixie is basically correlated to a basket of currencies, so naturally it includes the dollar, it includes the euro, and so I mean, of course, on higher time frames there's generally an inverse correlation, right, between Bitcoin and Dixie. I mean, very often when the Dixie goes up, Bitcoin goes down, right? But the thing is, we actually saw a bit of a change in character, right? Specifically it was last Friday, actually, yeah. We had this huge dump in Dixie, but also Bitcoin dumped as well. And so this is just to kind of bring us back to earth, right? So just because whilst in higher time frames there is generally a correlation, it's not always the case, right? And so could the Dixie be getting some kind of support? Potentially, but it does seem like as it's kind of gone below the 4.5, it seems to be heading around here, but we'll just have to wait and see. Okay, so wow, it's gone up quite a lot actually. So now we've actually heading towards this 48%. We haven't seen 48% in a while now, actually. I mean, of course, people always get this wrong. Like, just because Bitcoin dominance is going up, it doesn't mean Bitcoin has to go up as well. Bitcoin dominance is, of course, it's the proportion of the total market cap that's attributed to by Bitcoin, right? And so sometimes Bitcoin dominance can go up, but Bitcoin and alts can still bleed, right? And so that's something to consider as well. Oh, Stock Poker is saying something. Let's see what you have to say. Do you look at candle patterns, daily forming a doji or spinning top, starting to make some potential reverse patterns? I do look at candle patterns, but it's more confluence, right? So looking at how it interacts with EMAs and, of course, fibs as well, right? So I'm more interested in the reaction. I'm not so obsessed with the names as such, but yeah, let's look at the daily, your daily. But the thing is, stock poker, right? The daily hasn't closed yet. We still have an hour and 20 minutes. I mean, of course, the day it's most likely going to end up in a dojo, right? I'm going to draw a fib actually from this local peak. So, I mean, so this was around, I'm taking the 32k high, right? So it seems like now this actually could be a bit more interesting. This might be interesting. So if we go up and form a doji and it's kind of rejection of the 786, that will be quite interesting. But that for me is not enough to take a short stock poker. I'm more interested in shorts and longs once liquidity is taken. So so most people draw support and resistance light. So for me, I might draw support and resistance, but I see it more as a liquidity zone. Once this liquidity gets tapped here, I might then open a short, right? Because I'm trying to think, do you ever click over to Heikin-Ashi candles? Sometimes. I mean, Heikin-Ashi candles show the general trend, right? Sometimes, yeah. Heikin-Ashi candles, they're calculated a bit differently to normal candles, but they generally show the general trend. And so sometimes they kind of weed out the fine details in between candles, right? But candlestick patterns show a lot more detail. What's interesting, of course, is that the CME gap as well has been recovered. I mean, of course, everyone's looking at this, right? So when we dumped here, we had so many imbalances and fair value gaps here, like so many single prints, and we naturally recovered this recently, right? So we took out this. So this green bar represents CME gaps. We've naturally recovered this, and so of course a lot of people are speculating we're going to dump, right? I mean, it is possible. Like nothing goes up in a straight line. Another CME gap. I'm not a huge CME fan, to be honest. I mean, I appreciate them, but I would never really trade based on CME personally. It's something I look at, and of course another CME gap is around here, right, between 34.5 to 35k. So this is another CME gap to consider as well. There's always a risk we can break down, right? Because this could be some kind of compression. That's something to consider as well. Something I'm definitely careful of. Yeah, I mean, guys, this is all I have to really talk about today. If you have any questions, if you have anything else you want to talk about, you do ask questions. I'm here. I can stay around to chat a bit.